everything is man-made. What do I mean by man-made? It is created on purpose. I did like years of backtest on that stuff. I created like hundreds of expert advisors. I hope everyone knows what that is, who we are based on retail strategies. And yeah, I just found out that it is all man-made. Because why? All the EAs which were running on retail concepts like the FIB stuff or trend lines or whatever it is, if you put them on a one-to-one risk to reward ratio, they all have a 50% probability to win. But all the strategies, like how can it be? That cannot even be a coincidence, right? That's not possible. So the only logical answer for that is it's all man-made. So you just have to ask yourself, why is that? And the true answer to that question is to give people a reason to trade. Because if you don't have a reason to trade, you obviously don't put your money into the market, and yeah, you you most likely will not trade then, right? So you need a reason for you to believe you can make money in the markets. But it's not a secret that most retail traders lose money, right? The numbers are official. You can see it on every broker pretty much now because they have to make it public. So the number is around like 89% of people in the markets lose money, right? So why is that? As I said, it's all man-made. And once you understand that concept, I know it's hard to believe, but you just have to do your own back test on that if you don't believe me. But as for now, just trust me because I did a lot of back tests. I did thousands of chart examples, thousands of back tests, and again, I programmed hundreds of expert advisors which are running on this way. So okay, what's the difference now in WWA? So the difference is we have a better concept now. We know that the institutions have some levels where the market will be driven to. So we have key points to have a good orientation for us, so we know we will jump to that point to that point. But unfortunately, the same concept with the false showing uh, is the same thing in with this concept. What do I mean by that? You will get shown false IFCs, you will get shown false structures, and so ever. So what do I mean by that? Just give me a real life example which happened yesterday. Okay, just bring it up. Oh, give me a second here. Okay, so I hope no one of the mentioned in the pictures has something against it, but it is public in the chats anyway. So, and it's for you guys. It's not to make something against you or whatever. It's for you. So I hope you appreciate that. Even if you mention out Nadeno, so that's why I said you have a star roll. Yeah, but obviously it's for you, so not a bad thing at all. So we had yesterday. Okay, this was actually yesterday's in our Discord chat. So Dano saw something. He saw something on EU which he thought would make sense in terms of the concept he learned in the WBA, right? So what did he see? He saw this right here on the 1 minute. Okay. So what did he see exactly? So he saw something like this. Okay, he thought this is his IFC, right? He broke it down to the 1 minute. And look at this thing. It looks good, right? So he learned in the bootcamp or whatever that liquidity is lying here, right? This could be the FU candle. So everything looks solid, right? Why not take this trade? You might think. I will give you the answer in a few minutes. Just bear with me here for a second. So, whoops, that was a little too quick. No, there we go. So Musa, shout out to you as well, and Shabir, glad you get it because you were missed out with the 100 capacity. So they saw the same thing. They saw EU could be a valid trade. Why not take it? So they were talking about it in the chats, and I saw that. I was eating at the time, and I just mixed myself into the conversation and said, most likely will gonna fail, so better break even, right? So obviously making a little bit of fun here and stuff. So why is that? So I just looked at it and pretty much saw right away that this most likely gonna fail. Okay. So Kaval, shout out to you, man. You're killing the concept so far, so keep it up. So they pretty much asked like, why is it, right? I just said, okay, be careful. We will take out that highs. This high, we will take it out. And obviously, if we take out that high, then they will get stopped out, right? Obviously I will explain it in a second. Just bear with me this example. So even Ben got it right, and he said it even. Asia high liquidity should be taken out first. Okay. Again, I will cover that all after this example. Just bear with me. And I said, no, you can't even take the trade. I will not talk anyone out of a trade. You will get a reaction from it, but it's most likely gonna fail. Okay. So whoops, that's the wrong one. There we go. So what that happened? And I even said, combined on top on that, yeah, wait like 2 hours and we will see if they take out that highs, right? That was 13:10 my time, okay? Okay, so what happened pretty much then? So if you let that play, just based on this picture you see right here, just play it out.
Yep.
Obviously, you could enter it here just for the things you learned so far. Okay, you have to delete that first then. So you could enter it right here. Nothing wrong with this thing, but you should know with the things I will teach you in a few minutes that this is not gonna go like that far or whatever. It will not do it. It will most likely give you a reaction, but it will break that high then. So if you don't break even on that thing, you will get stopped out. But now, what I said you before, what is the market doing? It shows you exactly what you want to see. So it shows you this FU candle, tapping out this liquidity, shows you the retest of this IFC, right? It shows it to you. But what happened then? So it gives you a reaction. So you're getting excited, thinking, oh yeah, this thing runs. That's awesome. I got it. I caught it. There we go. And look at it. Ooh, look at this reaction. There we go. There we go. It's flying. So people getting excited. People even who missed that trade, getting the FOMO stuff, the fear of missing out, and thinking, oh yeah, that was the reaction. Let me jump in now because I don't want to miss it. And funny thing, people did that. So Shabir said, "Oh yeah, I'm break even, nice one." And Dano said, "Yeah, already up 1 to 4. That's amazing. There we go, right? So that's good. So then it comes back up again. So people see, oh yeah, that's a valid re-entry because it comes back one more time. Let me jump in now. Okay, people getting excited and stuff. And funny thing, that's exactly what happened. So Enoch, I saw you in the call too. So shout out to you, man. And he said even re-entry manually, right? So he re-entered that thing because he got a break even on that one. So he re-entered it here, and look what happened. So you get a reaction from it, that's for sure. It will give you a reaction because that's not wrong at all. You just have to know where to get out and what happens next. So it gives you a really pretty reaction, but what happens then? So now you have a break of structure, right? So people would even say that this is more valid even more because now you have this break of the structure and you could enter it in this area again, right? With the banker block type of scenario. That's not wrong at all. It's just like you have to know that it is most likely it will take out that high. Again, I will give you the reason for that in a few minutes. But just for this example, you are in the wrong place on the cycle. So that's yeah, sure, you can take that, but you have to get out. So as I saw that, I was like, yeah, that's now solid. That's now a solid Sabbath to me. So I will join the guys which took it short. Obviously not to make fun or whatever, just to counter trend it because I was in a buy here and in a buy here already. I will show you that in a second, and I will give you the reasons why I did that. But I entered it here. Why? Because now it is a confirmed break of structure. Just to know that this is, like Alex said in the bootcamp, it's a complex pullback. It's not a valid break of structure in terms of the whole structure. It's just a break of structure to make it a complex pullback. So you can't enter it there, that's for sure. You just have to know where to go out. There comes the reaction from it, messes a lot around a little bit. But noticed that if you will let play that thing a little bit out, gives you the reaction from it, bounce a little bit around, and boom. There we take out this structure right here, right? So people getting even more excited now. But what did I do? I closed that trade. I closed that trade and focused on buys instead. Why is that? Because if you look at the bigger picture, just think about it. How much liquidity is lying up there? And this wick right here did not take out this liquidity up there. So there's still a lot of liquidity lying in this area right here. So it only makes sense for them to take that out too, because so much liquidity is trapped in above this high right here. I will get into much more detail in a second. Just let's continue this example right here, right? So, okay, what happened next then? I closed my trade. Everyone's getting excited because you have another break of structure. People jump in probably here again, whatever. And watch the timing. Watch the timing on that thing too. That because that will be a key factor as well. And oh my god, what happened? Oh, okay. What is going on? Oh wow, what is that? What is that? What is going on? Daniel, can you tell me what's going on? Oh, that was me. Yeah, EU hit my SL. So Daniel, there you go. That's the reason why your SL got hit. So I was doing that at the time, so I had a buy here. That's pretty much a little bit small, but I will show you it in a bigger thing. That was the hedge trade. That was the second entry. I will show you that in a second. So if you remembered what I told you before, when what I wrote in the chat, I even said we will take out that highs, right? And give it like 2 hours and we will see if they take out that highs, right? I said that in the chats. I said it. And as you can see, we took out that time. What time is it? It is 15:12, right? So when did I wrote that? I wrote that at 13:10. So it's 2 hours and 2 minutes later. So that's why I stated here close enough, right? Because it was not 2 hours, it was 2 hours and 2 minutes. So obviously, and then, okay, it does not even stop there. So then we had this trades. I took this trade and had a trade down here. I will show you in a second. But then I posted it, and yeah, it was a 1 to 30 and a 1 to 20. I closed it above there. Why is it a little bit pullback? Obviously, because I take a screenshot. I close 99% of my trades, and I close it. So that's where the pullback happens. Because if I close it out all, obviously I cannot take a screenshot. But I said reversal incoming right at this stage, right? Look at chart right here. I said reversal incoming. What happened? Boom. I guess that's a reversal. Obviously, I don't show you that to brag or whatever. I hope everyone sees that. I'm just giving you this example so you see where you're seeing it wrong and how you should look at it. Okay? So if you let that thing play out, obviously we had a huge reversal after that one. So make it the 5 minute. And you see we trade of that based on that then. Okay? Again, that's not to to say I know more or whatever it is. It's just how it is. And the things how you should combine into your trading, right? So and let me explain you why. I just have to switch this thing off quick and give you a new slide here. It is this one. Okay. So believe it or not, but obviously again, I don't want to blame or to brag or whatever, but that's the trades I took on EU this week, right? I mean this week and the last week. So this is Monday, obviously last week, and this is yesterday, right? So that's all the trades I took on EU, right? So yeah, I mean the guys who are not in August probably can confirm that, but the guys in August, I mean, I posted pretty much every trade, right? So it's not that I made it up or whatever, but it's not about that, anyways, right? I just give you now the reasons for you to not get trapped and not look at the wrong POIs, right? Yeah, the purple box, very good question, because that is a major thing I discovered over the years, and it's a really good guide, and I can tell you obviously what it is. But obviously, and again, I will keep it simple today because it's the first call for the August guys and whatever. And I know a lot of you guys from the other boot camps never heard something about that as well. So I just make it a little bit slower and basic. So the purple box pretty much is Asia, the Asia session. Okay, so the Asia session, the Asia session starts for me at 0 and ends at 7 o'clock. So you can, yeah, whatever time that is for you, but you should mark out Asia. Obviously, you don't have to, but it is a really good guide. So why it is a good guide? It gives me just liquidity zones. And as you remember the things I told you before, it's all about like tricking people, building up liquidity, and whatever, right? So Asia is just a guide for the day. Is if we want to trade intra-day, meaning just on a daily basis, not like swing trading, holding trades for like 3 weeks or whatever. No, I mean just close pretty much all trades during the day and open new day trades the next trade and whatever at the next day. So what do we have here? So this is Monday last week. So we have this Asia session, right? This just gives us the build up for the day. So what does it do? It builds up these equal highs. You all know this concept, right? So liquidity is building up there, and obviously it gives you this low, which, and now there comes a word which you will hear a lot from me. It's called inducement. Okay, I know a lot of you guys ask me question what it is and whatever, and yeah, we will go a little bit. We put a toe into what it is tonight, but again, it's just a basic call. Just see what they're doing. Yeah, seduce to induce. There you go. No, just think about what they're doing. They're building up these equal highs. People think that is kind of resistance, whatever. And what is the inducement here? The inducement means just people put, believe it or not, like breakout traders put their sell stops below wicks like that, or breakout traders to put their breakout trades like their buy stops above areas like this. And again, obviously, if someone sold that thing, their stop goes most likely above areas like this. Like if they bought it here, their stop obviously goes below an area like this, right? So, and that's the inducement phases. They're just hunting pretty much your stop down or whatever, or induces you to buy or to see a break of structure or whatever. But remember, it's all based on tricks. It's all based on what they want you to see, right? Or what you want to see pretty much, right? So why is it stopping right there? I mean, if you look at it on the and I know a lot of you guys ask me what that means. That's just German, so that's the 1 hour, right? So just for the guys who are confused. So if you look in this area, there's not really anything why it should why we should reverse here. That's pretty much nothing. Obviously, you can make something up, like say, yeah, we bounced off that wick, but yeah, then you're making stuff up, and that's not what you should do. You should never guess or whatever. See something in hindsight and say, yeah, we bounced off this wick. That's wrong. You will get burned if you do that. So don't like guess or make something up which is not there. Okay, and the answer is there is nothing. There is not really any zone, valid zone, why they reversed on that. But if you look to the bigger picture now, what they're building up during the whole week, then it will make much more sense in a second. Okay. So what are the valid zones we had? We had this area, right? This one right here, and a false one, which is this one. Okay. This one was a valid one based on this one, but that's done now. That becomes your banker block if you want to trade it again. But if you want to trade it up again with the cycle did, then this is not a valid more anymore. So that was valid at a stage, and you could take this trade for sure, but notice that it's done after that. But that's a different story and a different example. Probably not too much, not enough time for that tonight. Just think about it, what they're doing here. They just give you a point in the middle of nowhere. Why they're doing that? Because again, they have no reason for reversals here. There was no IFC, no nothing other than this thing you could make up. But then again, why does it do it here and not here or here or here or whatever? They just make it here on purpose so you're getting a little bit confused and think that is a major thing you should be looking at in the future. But that's wrong. They use it to build up liquidity. And if you look to during the days, they take 4 days to get to this exact level, once again. And what do they show you? They show you the equal highs. So what should that tell you? Liquidity is building up in this area. They building liquidity. They give you the false illusion that this is a valid point of interest for you, but that's wrong. You will get tricked. They do the same exact thing on the low side. Look at it. They give you this wick randomly in Asia, and look where they go next. They give you this equal lows, so you think that this becomes your valid IFC over here, and you would trade this entry right there or whatever. You would get smashed. Why is it? Because they build up the liquidity, and now that's a key statement, and you can write that down because it is very important. Only look for IFCs and in terms of intraday basis if you're near a liquidity zone. So like this, you have liquidity built up here. A lot of people putting sell stops below it. A lot of people putting their stop losses below it. A lot of people see break of structure if it breaks that thing and whatever. So this is a major zone. So what happened after that? So they broke this equal lows with this wick. And where does the wick go? It taps exactly into our valid, sorry for that, our valid IFC, right? So this is a high probability setup. Why? Because we took out liquidity first. Okay, but not on a fake scale like I showed you the example on the 1 minute in Asia on EU. I will cover that in a minute. But that's real build up liquidity. There's nothing really they will take out other than that, but that's happening later, right? But for now, that's so much liquidity building up. They're doing 2 days that this becomes your valid entry based on this IFC. Obviously, you can break it down on the lower time frames, but just to understand the concept of what they're doing, they're building up liquidity, and the IFC taps into this IFC again, right? So this becomes your FU candle, how you learned it, and taps straight into this IFC. So that's a valid trade. You can take that just based on that. Obviously, you break it down and look for your entries in your smaller areas. And notice that one, that's just like counter trend trades or whatever. And I will not go into that right off now because again, we want to hold it a little bit basic. So what they're doing then? So they give you this wick over here, right? So again, that becomes liquidity. So, and if you look into this on the 1 minute, then you learned too that you should always keep out in spots like this where the imbalance was, right? So in this case, the imbalance, you can clearly see that, is is from this area to this wick, right? So this becomes your imbalance, which still needs to be filled, right? So once you saw that, and we can go back to the 1 hour now, you had this valid one, which tapped into the 1 hour IFC. So this becomes a valid setup for sure. But on the next day, you can expect the inducement again. And again, we need an inducement first to have a valid POI. And we induce this low right here, right? So we broke that. People getting excited, people getting seeing a break of structure, people getting stopped out, whatever. But you are clever than that, and you see the imbalance in this wick here. This becomes your IFC. You can take a pending order just from that, or you can break it down from to the 1 minute, which I did. I can just show you a little bit quick to see how you could break the trades down a little bit more to get a little bit more entry, but just to understand the concept. This is the 5 minute by the way, not the 1 minute. But you see this wick tapped right into the imbalance. So if you put a pending, and obviously the stop goes below the structure to the left, obviously that's below that wick right here. So stop is here, entry is here. That's the two lines. So you would get be tapped in and obviously not gonna stop out. So that would be fine for an entry for sure if you put a pending. But what I like to do is wait for the reaction. And I even counter traded that thing. I completely made a PDF just based on this trade alone. I don't know if you can find that. I think it's in the winning section. But again, this becomes your most valid setup. Where this becomes your IFC, you have your imbalance in this spot. So you wait for the retest. Boom, banker block scenario. That's a valid setup for sure. Stop goes below this wick. And there you go. It's a little bit big stop, but yeah, the setup is really decent. And if you just look at the 1 hour once again, you have plenty of room to be covered. And yeah, it did that exactly. So just again, it's based on the trap first, the inducement first, taps into the IFC after. So liquidity grab and then FU candle straight into the liquidity zone. Okay, so we build up all this liquidity here, they take it out. So that we get a reaction from it, so that they wick it. So people think now this is actually the IFC once again. And you see how they trick you over and over again, right? They do it on a daily basis, all day, every day. They build up liquidity and they take it out, and you get confused at the end. So let's break down that EU trade which I showed you in this example. So again, this is the Asia session, right? So this gives us the guide. So this is the high. Obviously, this was the false one. It's from the example I showed you. So you can base an entry on that, but just remember to be invalid POY, you need an inducement first. Obviously, you had a small little inducement, but the real liquidity lies here. So expect this to happen and then search your trades after that. But on the 5 minute and 1 minute, we did not have a really good entry on this one. So I entered it here. That's the RD. I did not cover it yet, but that was a really pretty re-entry. Okay. For today, it was a little clearer. Again, what they're doing, they give you this false illusion of the equal lows, right? So this becomes your IFC, your valid one. Obviously, we want to take out the liquidity. So that's a valid entry for sure, just based on the IFC and liquidity once again. You always want to take out liquidity. So this is the liquidity buildup. This is the FU candle. You just trade the banker block scenario where you took out the liquidity first, right? So always line it up with that, and you should be on a really uh yeah, safe side. Okay, so that's pretty much the basic stuff. I know that was quick and stuff, and I give you just a few more things which you always look out, which are really important. Like I gave you this example with the timing. Always look for moves like this, like the extreme moves, the POY zones, the FU candles or whatever you want to call it. They will always, obviously not always, but there's a high chance they will happen in London Open and New York Open. Okay, so always watch out the timing. So that's why I knew that this will be exactly the timing, because if you uh yeah, watch the timing on that thing, that's exactly London Open. So that's 15 my time, and if you see on the bottom, it's exactly 15:15. So that's just the first 15-minute candle of the New York session, which took out that high. So timing is really, really important as well. And once you combine that three things, like combine the liquidity, combine the FU candle with taking out the liquidity, and maybe we have a better example down here. Yeah, that's pretty much the best example I can show you for this. So you have liquidity build up here, right? You have this FU candle, and if you look at the timing, it's look at the bottom, it's 15 o'clock, right? So that's New York Open once again, and it taps right into this 1 hour IFC. See, but the timing is again, it is around New York. So you combine three things. You combine the liquidity, you combine the FU candle, you combine the timing, and obviously the IFC candle, which is so you can say four or three things, but that's the most key things to combine once you learn the whole concept and to avoid getting tricked into false IFCs like the ones you get in Asia. We had a great example like 2 days ago where this was the liquidity trap where people thought this will be an IFC and they took it off from here. Because if you look at it in the 1 minute, that thing looked pretty on the edge, but again, it was just a trap which you should not fall through. Yeah, again, you can see this equal highs building up. You can see this wick took it out, right? So you could say, yeah, that's my liquidity trap. But again, you have to understand the concept. So you can say, yeah, this is your imbalance or whatever. So you would base your trade on that. But then you would get smashed. Why is it? Because think about the timing, which I said, and where the liquidity lies. So for sure, we have, oh, let me stop that. For sure, we built up this liquidity up here. We took it out with this wick. That's why timing is so important. Just think about it. This is Asia, and this, by the way, is Monday. If I'm not wrong on that one, I think that is Monday open. Yeah, it was. It was Monday open. So the market were open for 2 hours, right? So it's 2 o'clock my time, or 3 hours. 3 hours. The market is open 3 hours. It's Asia session. It's Monday, and we're trading EU. So first of all, what business does EU have an Asia session at 2 a.m. in the morning on a Monday? Like the answer is nothing at all. So yeah, they give you this trap, but just based on the timing concept, again, Monday morning, Asia session for EU, first day of the week. So there's not much people trading this thing. So there not people getting induced, not that much to be a valid liquidity zone. They just do it because it's so low value, they can easily put that thing through that. So people think that this is your valid trap zone, but it is not. It is not. So that's all factors you should watch out. So again, Asia is a guide and not the real trap zone. So you're most safe if you don't base your IFCs on an Asia candle, because Asia should always be the guide if you're trading pairs which has no business in Asia. Obviously, I mean if you trade like whatever, like Aussie, yeah, whatever it is. Yeah, it can be a different story, but I don't trade that pair. So yeah, you have to do your own backtest if you want to trade like exotics or New Zealand pairs or whatever it is. But yeah, just combine that few things, and you will have a better time and not getting trapped into the wrong POIs. So that helps a lot. Trust me on that. And always think about the intentions of the things they want to do. First, they will show you something what you want to see, right? Then they confirm that, like give you whatever reason, like in this here, like they show you the IFC, they show you the liquidity trap. But if you base it on facts, And that's something you learn in the boot camp as well. Always base it on facts and not just on whatever reason. Then it makes more sense, right? So then they give you the reaction. So obviously they give you the reaction, they give you the false move going down. And then you're getting excited, the FOMO kicks in, people jumping in, people who did not get the entry jump in late, getting re-entries or whatever, and then you get stopped out. And then you get left like, oh my god, why did I stop out? And then it moves your direction, right? So if you took that trade, it stopped you out, and then you watched it how it runs like hundreds of pips in your favor, and you get left asking yourself why it happened. If you combine that few things I just gave you, you have a much better guide. So that will not gonna happen, right? Okay. So just think about it, the reasons, and always think about the inducements first before you look for a valid. Yeah, and this one obviously there's no real chance of getting an entry because if you look at the higher time frames, there was just nothing. We are just in a yeah that's so far behind you cannot even look that up on the yeah on the lower time frames, and obviously the next POY would be up here. So yeah, no really entry in this week because yeah we're trading just into this yeah yeah not really great zone. So not really an extreme entry on this one, but again then trade just a reaction from it, look for your continuation trades, and that's pretty much it. So that's the basics you should always keep in mind, like an additional things to the bootcamp which you learned already, and just always try to combine that stuff, and you will have a much easier time and not getting tricked so much. So for the guys which all again like are in different time zones and whatever and need to sleep, the content for this session is pretty much done as we covered all the basics. So if you have to go, again, appreciate that you were here and let me know if you enjoyed it. And for the other guys, we have some time. We can go over a few questions for sure and make it a little bit more clear. So if you have any questions, just let me know and I will gladly. But again, please hold it a little bit basic in this session because again, we don't want to jump into more advanced stuff right away. Just if you want to ask a question, then please relate it to the things I just I just went over. Yeah, Dennis, go ahead. Okay. Okay, just answer that one first because it's the next one. So, what's the inducement? So, the inducement, why can I? Okay. So, the inducement is exactly that I explained here. It induces people to, to doing the wrong thing. Like, again, seeing the break of structure, people placing sell stops below this thing because they think if they break this whatever support zone or whatever people see, it's just wrong. They're getting induced to do the wrong thing, right? But once you understand what the inducement does, then it's easier. Like inducement to do the wrong thing, like seeing the break of structure, whatever, people getting stopped out. Like this is just a pure inducement wick, nothing more than that. It's just an inducement. People getting with the breakout traders thinking this thing will run again because look at the trend and look what they're doing, and it's so obvious once you understand that because people draw like trends lines and stuff and just look at that thing. People draw like trend lines, they're getting the reaction from this trend line and think like, oh my god, yeah, it runs. So just let me put my buy stop or whatever it is above this because if we break that area, it tapped the trend line. Oh, yeah, oh my god, I've become a millionaire. So no, that's not it because you will get tapped in and then yeah, you get stopped out and you're left wondering why it happened. So never do something like that.
Rian,
Yeah, is it
someone
Esther?
wants someone wants to see the last trade you lost.
Yeah, obviously, I lose trades. That's not a secret. but it's mostly based on stupid stuff because as you see, I take so many trades and like Tuesday was a funny example where I just hatched it over and over again, and I do it all the time. Like if you look at it on the 5 minute, like I do a lot of hatching, like stupid shit like that. Obviously, you should not do that, but like I see this point and I know it will give me a reaction from this zone, so I just hedge it to have like an risk-free re-entry down. I made a PDF on that one, but again, you should not take a sell in this area, for example, or yeah, I took a lot of things on Tuesday. You can see I mean, yeah, again, that's just the trades which worked out. Again, that's not the ones which did not work out. But I think where was it on Tuesday, if I remember correctly? Yeah,
So you
I
don't
think
really support counter trading.
yeah, I do a lot of counter training and intraday stuff. I mean, I was taking this one for example, but I that's a break even at least, right? Then it comes lower, then I just take it again and stuff. It's just like if you have multiple points of interest, that's just a part of taking risk. So if you're not sure exactly if it will go to this one or to this one or whatever or in between, then you have to take the risk, right? Because your direction is right anyways once you understand it, right? But if you want to nail the real extreme entries, yeah, obviously there's risk involved, and you will get a few hits as well. That's for sure. Yeah, Esther, I think you you need to help me out a little bit with the questions because
Someone wants you to go through daily cycle.
yeah,
Is
that's
that
more of an advanced thing. That's not really basic one, but it has to do a lot with the with pushes and the intentions of the pushes. So I have rules to line out the complete day and what they do. Like for example, a push, like I call it the first cycle. It will like this for example, to give you a good one because we just went over this. So like I said here, where people draw drawing trend lines and shit, this for me is already the first cycle because the first cycle shows you the last false move to the side people want to see. So people see this trend line. Obviously, I drew it a little bit crept up, but you get the point. So they see this tapping the trend line, and then they're getting the reaction from it and thinking this is the valid point to go, right? The valid direction to go. So they jump on this with buys. But for me, that is already the false, the continuation for the this side direction. So I call this cycle one. Then the cycle two does again. That's a little bit more advanced, but we will cover that in sessions when there's time for it. But that's not a basic, not at all.
okay? There's a question here. Do you use midnight New York time for true day open? Meaning,
For
if we're bearish, you expect inducement above that level first. Do
okay,
you also use Asian range for spotting inducement easily?
yeah, that's why I always draw like this purple box. It's because I can see pretty much without a doubt in which time the moves happen without looking at the time or whatever. Because if you're in the 1 hour, you probably would not know like right away. If you look at this, for example, like what day is this or what time is this. Again, you have to look to the bottom and see, oh, okay, this is Asia, and then you're getting a little bit confused and okay, what is that? And but if you make it like this, you have a really good guide through the week and guide through the day because you know, okay, this is my Asia session, that's my guide. Okay, this is the New York, this is New York reversal, that's an own trade on itself. You have London trap, so this is my London open trap, and so on and so forth. You can pretty much line it out and plan it out during the whole day. So, for example, I would not even look at a trade around now. Like it's so late in the day, I would not even look at it, even if there's a beautiful, beautiful trade presenting to me, because it most likely gonna fail. Like this, for example, I looked at it. That would be a valid reversal trade, but it did not even tap the 1 hour IFC, right? So that could be something for tomorrow, but it most likely will gonna trap to the upside first and then break even this thing. But yeah, again, obviously we have to watch price action once it does it, but a trap to the high side and then low side would be much nicer on
Okay.
this thing. But again, that's not what we're
Okay.
doing
And
right now.
there's another question. How do you mark up your charts?
Yeah, I don't I actually don't use TradingView at all. I use it in MT4. I mark all my charts up in MT4. I have a lot of tools and yeah, to help me a little bit keep track because it's actually a lot of things to be included. But you will get there.
Okay. Oh, and another one. You went over in the they're coming fast. Okay. The first example you went over in the beginning of the call where you knew you would go up and you sold. What was the candle you based your entry and stop loss off?
did did he mean the buys?
Yeah,
Okay,
yeah, as you went long.
okay. Let me remove that crap. So again, like I told you that the Asia gives you the liquidity, right? During the day. So another very important concept, which I forgot, glad you pointed out, is the Asia midline. Okay, because you learn in the bootcamp the equilibrium or whatever you want to pronounce that stuff. It gives you another point of confluence, right? So if you have something lined up with the Asia midline liquidity, that is much more pretty, right? It gives you just a little bit of an extra, like an extra point of interest where you could lead into the day, right? Because again, it's all about liquidity and spotting the valid liquidity spots. So, and again, it's just the inducement again. So you have this around Asia Midland. So this is a spot where I just watch. Okay, I don't take this one or whatever because again we want the inducements first. And if you watch what the 1 minute does, because the 1 minute always explains it very good. What are we doing here? We're building up liquidity. We're building up these equal lows. So people think this is the valid point to go. So if it comes back down here, people will buy it from this. But it's not. It's just the build up liquidity, and then this is the FU candle which takes out this liquidity right over here. They build it first, they break it, and I simply traded the reaction. So when it come back here, and again, they do it here once again. It's the same concept every day, every time frame, everywhere. So liquidity, FU candle, liquidity, boom, FU candle, right?
Yeah.
It's the same thing over and over again.
Okay.
I took it a little bit late because I just put an I got a little bit lucky because I put an alert not on pending. Yeah, and I saw it when it was there, so I just entered it, market order right there.
Okay. So how do you differentiate real deep breakup structure and liquidity grab?
Sorry, can you get say that again?
This is a question from someone. How do you differentiate real breakup structure of liquidity grab?
Yeah, that's that's a tough one and probably will not be basic, but um, just to give you an overview, like this again. This is not a break of structure. Like you see this equal lows building up. You you could say that this is a break of structure, but that's just wrong. That's a liquidity grab and not a break of structure. You could say this is your low, these are your lows, this broke the structure, and then you would have the complete picture wrong because you would look in cells in here or whatever. But you completely got the picture wrong. The bigger picture is the most important thing. To see that they're building up liquidity and to trap this IFC, still left imbalance over here. So I will come back to that one. So if even if you want to swing trade that stuff, and that's why I don't do swing trading that much, is again you have this beautiful, beautiful looking IFC. Everything very pretty. You had this equal lows build up. You have this FU candle. Timing was great. IFC was amazing, and then you swing trade that thing. So you were up like what is it? I mean, I closed it out when we broke above Asia. So this thing took my break even in Asia, my TP in Asia. But just for argument's sake, you want to swing trade that stuff because that is pretty, right? Then you were up like what is it, 1 to 15 or whatever, and then you would get a break even. I mean, that's not a good deal, right? So I rather close out my 1 to 15 or 1 to 14 or whatever it is and look for re-entries the next day. So yeah, and this one I held longer. But that's just because it is the last imbalance. It cannot go lower, but then if we go lower than this, it's a whole different story. But at this IFC, we had still an imbalance left here, so it's most likely that we're gonna tap that in. We did it the very next day, but that's then the last point where we could go from. So that's why I held it a little bit longer. If that answers your question.
I hope so. Okay, one question. Can you kindly show a sample of your MT4 chart?
No, I won't do that because you would get freaked out. Yeah, but it's
Okay.
basically just tools which give me a better oversight or whatever you want to call it about the sessions and the liquidity zones and whatever. So I pretty much I already know if I look at my charts that obviously not here, just give an example, but for example, I will see something here in my MT4, which I obviously do not because I don't even have it open. But I'm just giving you an example. I would know already that I would look in this area, right? But only if my tools confirm. And again, I have a lot of tools, but you don't really need it. You don't really need. It's just a helpful thing, and why not use it if you can, right?
Oh,
Okay.
all right. How do you know what side of the market will induce Asia high or Asia low, and
Yeah.
which is going to be the real move?
Okay, that's a very good one because sometimes we do both, like for example this, but that's just part of the daily cycle, and that's even better. That's the best days when something like that happens because you get a lot of opportunities when something like that happens. Okay, like yeah, for example, if it traps low here, you can enter it here, and then you can reverse it on a and New York or whatever. So you get even two setups for one day. So if you see in this example, what is it, the 31st, it doesn't really matter. So you had the inducement of Asia to the low side, so you line it up with whatever. Not will go to this example right now, but that was a very amazing trade. And then New York, you can reverse that thing to a quick pullback, and again, that's if it traps both sides, that's even better. But again, that's rules which guides me into that. So yeah, I know the cycle is pretty much done here anyways, and then I just line it up with the IFCs for my entry. So you have to know that I took like 1 to 5s and stuff like on a daily basis before I joined WWA. But after I joined WWA, I take 1 to 50 trades on a daily
Wow.
basis, right? But and I'm not even kidding. So yeah,
Can I
that's
I'll just like to unmute Dennis because
yeah,
he
sure,
wants to
do it,
clarify his question.
do it. Always
Okay.
love to talk to Dennis.
Dennis,
Thank
come on.
you. Thank you, Esther. Thank you, Esther.
Okay.
So basically, what I meant, let's say we are pre-London Open, yeah, and you got your Asia high and your Asia low.
Yeah.
Um, how do you know which side is going to induce in the first
Yeah.
place? So, for
Yeah.
example, on the example you just showed, we first induced the low side. Did you predict that, or do you just react
No,
on the
I never.
induced?
You should never predict. You should
Hmm.
always react. So
Okay.
you react to what happens. So again, you probably don't know the daily cycle as of now,
Hmm.
but yeah, that's a little bit advanced, but you have to understand the daily cycle for that, and that's just great what they did. Like the day for me here was like the low of the day was forming anyways, right? Again, we have this huge liquidity trap here, but the cycle overweights the liquidity. That's why it's the advanced setup, the advanced concept, and not the, yeah, obviously the basic setup is take out liquidity first. But on the smaller picture we did that. So what do they do here? I think everyone can agree that this is the build up liquidity on a smaller basis. And again, we have the Asia low, we have this two wicks which pretended to take out that, and then we get the reaction from it. So that's all build up liquidity. And then we get the last equal lows, and then the tap with the FU candle. And if you look at that FU candle, it's a picture perfect as it gets, a huge candle with almost no wicks at all. And then the second after that tapped right into this last IFC here, right? So that makes this whole thing a very, very valid setup, even if liquidity is lying below that. But obviously, we will take it out like later, and we already did that for sure, right? But you get what I mean. So, but it's not that there's not a liquidity grab. No, they build it up too, but it's just on a smaller basis. But it's combined with the daily cycle, which were completed at this stage. Again, that's an advanced thing, and that will blow the whole roof off a little bit because I use so many rules and guidelines for that. But yeah, for me to spot that, it's not really that hard anymore. But just for now, you should see the Asia low, the Asia high, liquidity being grabbed here, liquidity building up here, and the last liquidity grab and tapped straight into the IFC. And you can see that from a mile away, can you? Equal lows, FU candle going straight into the FU and the IFC. Boom. I mean, look at that beauty. Cannot be prettier than that.
Okay, another question. Can you take us through the 1 to 300 G sharp trade you took?
Yeah, I can do that. I don't even know if I marked it up. PvP. Oh, okay. I did mark it up. So yeah, that, by the way, this was the first 1 to 300 trade, so that was beautiful. So it was, whoops. It's again, it's the bigger concept of the things, what they're doing. So yeah, what we have? We have this equal highs build up, right? I took that short first because again, that's valid at first, but then it will be just becoming an equal low, which will equal high, which we will take out for sure. That's that's something I knew when I took this trade, right? So I aim, yeah, for this to be broken. That's for sure, right? So just look at it, how they build up the liquidity here, how they're doing it once again right here, how they're doing it here like crazy. So you see how hard they try to build false. You can call it resistance, you can call it whatever you want, and the end of that, it's all bullshit. It's just all man-made stuff to trick you. It's all build up liquidity. They try so hard to let people think that this thing will gonna drop. That's why I held it for the long side. And it was just based on and again, look at this. It's the same concept. You have this equal lows, FU candle, tapped right into the 4-hour IFC, and I took it from the 1 minute. I hope we can go that far in the 1 minute. So, and this is actually a really funny one. Let me walk you through that one. It is really funny. It is really funny. You will laugh, I guarantee. Because, oh shit, no. Oh shit. I hope I did not move the whole thing now. I think I did. Okay. So, obviously we had the 4 hour IFC, where this purple boxes, right? We had this liquidity build up. I showed you on the 4 hour. It was a little bit nicer than that. I can show you once again. You see it here, formed up liquidity, right? So we expect the FU candle, and where there's a tap, boom, right into our IFC. So, and yeah, like again, the daily cycle was completed. That was so obvious. So I waited for this thing the whole day. The whole day I waited for this thing, right? So then my alert popped because we, yeah, we tapped the 4 hour IFC, which is amazing because I had my daily cycle done anyways. So I'm just waiting, and that's the way I do things. I first mark out my daily cycle, and then I mark the areas where I expect the reversal to happen, and then I line it up with IFCs. So I avoid taking or even looking at the wrong things. And look at the 1 minute, the 5 minute. What we building up liquidity once again. Boom, FU candle, right? It's the same concept over and over again. So when we go to the 1 minute, that's not really liquidity build up, but we did it on a 5 minute, we did it on a 50 minute, we did it on a 4, so that's enough. If there's no equal lows in this area, that's completely fine. We tapped the IFC. I took it off with the retest, so my entry was right on this body. Stop goes below, right? That's the non-confirmed entry, by the way. So, and just based on instructions, you should not do that. You should not do that right off now because you should always wait for the break of structure and stuff. So you should take this entry, and I did that too. So now you see this wick broke this high, so that's your break of structure. Taps this IFC, so you should take this entry just to make sure. I did that too. So I took two entries on that thing. The first one, based on the lower one, that's the unconfirmed one, but obviously I combine it with different stuff, so I have my confirmations for that one. And the safer one, which is the confirmed one with the break of structure from this highs, right? And then look what happened. And I almost jumped out of the window. I'm not even joking. So look what happened. So that was great. That was great. Oh, I have to go to the 5 minute for that because it will take way too long. Okay, so remember my two entries, right? And yeah, then Asia session starts, so it's never a good idea to trade in Asia because there's madness. And yeah, all I took all obviously my trades at break even, right? So I was like, oh yeah, I will hold that thing for ages, happy life, and then this shit just wicked down like this. It wicked my first break even order,
Wow, that's
and
funny.
yeah, and it tagged my second break even to the tick.
Wow,
If it went like one tick lower, it would have took me out a break even. So
wow,
unfortunately, gladly for me, it
wow,
did not, but it took out this order. So I would
wow,
actually had two trades with 1 to 300 at this. With this shitty wick would not have happened, right? So it took me out a break even with that one. I guess it was a little bit of an, how you say that, like sacrifice to the market or whatever, just to give me the 1 to 300. But yeah, it it barely missed that one like by a tick or whatever. Yeah, so that was not getting hit. So yeah, I was happy about that, but mad on the other side because it took out my second order.
wow.
And yeah, that thing, that was the first target. No, sorry, the first target was
Did you have
this
a heart
highs.
attack?
Sorry.
Did you have a heart attack?
Yeah, almost. So first target was this, but it was already a 1 to 100 above that. So it was a 1 to 148 hours. So in 2 days, that was amazing. So quick 1 to 100. And again, this then I saw this building up. Then I aimed higher. Then it was a 1 to 200 around in this area. And yeah, and then I held it for the 1 to 300. So yeah, that was a pretty amazing trade. But you can see how it's combined with a lot of stuff.
Hmm.
just from the things you know already. It's not that I'm pulling it out of my ass and just say, yeah, that's a good trade. No, it's based on a lot of stuff. Okay. Can you answer the question from Eunice? Because I just looked it up and someone said, good question, Eunice, and I don't think he will ask anything not good.
I think you've answered the question. Eunice, can you type your question again? I'm trying to read. There are loads of them just coming in.
Yeah, we will try obviously to answer everyone's questions. Sorry for
Okay,
that.
probably I should just unmute him. Let me get him to speak. It's not easy reading all this.
Next possible entry was his question. It was, haha, so. Oh, okay, that's a good one. Yeah, at that
Okay,
stage,
Eunice, can
that's,
you?
yeah,
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 that was the question. It's just so if we were stopped out, obviously I could go and backtest this, but yeah, I was just wondering. So what would our ideal entry be if that broke structure and came back and hit our
yeah,
three?
that's a good one. And the answer is to this day, nothing, because the day was over here. So I had to wait like the whole next day, and you can see it, like it would be right in this area, but that's not really that clear as it looks as of now. So, but something in this session. I took so many trades on GF and I posted, obviously, like, I think like over 100 trades I took, like just on the last like 4 weeks or whatever. So yeah, something's probably in an. Obviously, I don't have every trade I took in my head, but yeah, if we will break that down a little bit more, there's
Yeah. Do you
obviously,
know when
but
you take it from the body, how often, from your experience, how often does it touch the body or the top of the
mm,
refined candle, like
yeah,
the wick?
that's a good
You
one.
advise to
Like
take.
just to make it safe, it's the better entry is the wick, because sometimes it just gets the wick, the IFC wick, and then it runs and never comes back, right? But yeah, if the structure is a little bit more clear or even not clear, depends on the picture. I sometimes do it from the body. Like GJ today, I took from the body. Like that one was a really beautiful too. So where we are. Just let me mark out Asia. Um, so it should be something like this. What? Yeah, I think it should be like that. So I took that one from the body. It was this one. That was today, by the way. So I did not take this, like I just did not like it. I just did not like it. It's just like something which you have to backtest a lot. I cannot give you like a real clear like answer for that one, because sometimes I do that, sometimes I do that. It's always depending on the picture. This just was prettier of the body than from the wig, because yeah, it's so close to this anyways. Yeah, it will take it out for sure, this, and I just knew it will go a little bit higher than that, and it just get into the body, and that's exactly what it did. Obviously it went a little bit higher, but that was the better entry in this case. Yeah, but that's a tough one. That's a tough one to answer. Like, but if you want to make sure and don't want to miss trade, because that happens a lot of times. I have like hundreds of examples where like the wick was like missed by a few ticks and it did not tap me in, and then it ran completely in my favor, right? That happens a lot too. So yeah, sometimes I want to make sure and just tap the wick, but if it's like this, if this missed it so close, so we will take this out anyway. So it's just logic that we will go a little bit higher, and that's what we did. So yeah, in this case, it was a little bit better to get from the body. I hope that probably not answers your question completely, but yeah, that just comes with you if you do a lot of back testing and take a little some of the trades, then you will see how they play around and stuff.
Will you take IFC, which was already tested, like 1 or 2 times?
No, no. That becomes, if it tested once, it becomes valid. If it tested twice, it can only be your banker block, and then it has to look a different way. And if it does not look like that, you learned the banker block type scenario in the boot camp. I hope you took notes on that. But the second one only becomes the banker block, and that has to be a specific way. And if it's not that, then I would not even look at it.
Okay, Colio, you can unmute yourself to ask your question.
Awesome, thanks. My question is just a follow up to something you touched on a little bit. So
Oh,
for
I
the
new face. Okay.
so for the Euro USD example, in the very beginning, when you were kind of talking about like, I would not have taken it as a sell yet, but then it broke structure, but you knew it was going to long term go up. So you knew the play was a buy, but then when it came back
You
up,
mean
you
you're
still
on the
actually,
example I gave, like with the jet?
yeah, yeah, and like the very beginning example, like you said you took a sell on it for like a really short, quick play before you kind of reversed into go into buys. And I was,
You meant this one down there. You meant this one? Yeah. Okay.
uh,
Is that the one you
I don't
meant?
know. There's so many RRs on the chart. I'm not sure.
Yeah, I
I
think
just
you're
know it was
talking
like the
about
very
this
first
one.
one.
Yeah, I'm pretty sure you talked about this one because you said this one, right? Yeah, I'm moving around a lot, so there.
Yeah, you're moving around a lot.
Yeah, there you go. Is that the one?
The one everyone took is the one. No, I don't think it's that one. I'm not sure. No,
Yeah,
it was like
because
the very first example. Like when you were like pulling up like the pictures of like the
oh yeah, yeah.
yeah.
You mean this one then? Mm. Yeah, that's just a hedge rate. That's just a hedge rate. Like the bias was not long. I knew it we will tap out the liquidity and then drop. I even yeah, forecasted if you want. But the direction buyers is not long in this stage. It's just tap out this liquidity and then prepare for the drop. And as there was no valid IFC on the higher time frames, like you can look it all the way up. I mean, that's not really an IFC in this area, right? So you can say this one, but obviously we broke that too. So that's not your IFC, and there's nothing really in this area, and I could not even looked it up because it's so far behind. It's from May or whatever. So you cannot even look at this and the 15-minute or whatever. Yeah, you cannot even go that far back in trading view, I guess. But yeah, it's just so far behind that there was no really specific IFC where you could base the extreme entry on. So if you have a rare example like that, you just need to wait for the reactions. Obviously, the better entry would be above here, but it never came here. So I took an RD, which is a setup yeah, you don't know so far. But I think your question was this hedge trade right here, right?
Sorry, he's muted.
Sorry about that. Yeah, I was muted. Yeah, my question was for the sell. So I was wondering what was the candle? Because like I remember you were on a 1 minute chart, but I didn't see like a refined IFC anywhere. So I was just wondering what was the candle you were basing that sedge, like the sell hedge off of?
Okay, good question. So I talked about like guys seeing this as their IFC, right? As their false IFC, because as we noticed, that was not it. So that becomes like for me, you can get a quick entry on that, sure. But then you have to know that you're trading into the trap. You will take out liquidity. So if you take the trade, you should get out soon. That's why a road get break even quick, because it will get take out this high. So if you not take this break even and just hang your stop over here, you would get stopped out, and that's not worth it. So I took my entry when it was even more safe, and that is based on a break of structure here. Okay, because here you don't really have a break of structure. So even just for example, but it's not, just for example, this is your IFC, which is not, then this would not be a valid re-entry because you have no break of structure yet. Here, you clearly can see that you have a break of structure, right? So if it comes back up again, you enter it in this zone again. I put an alert just in this body, and when the alert hits, I just looked at it and I fired a market order as it was uh, an counter trend anyways, just like that. Stop goes above this, and that was the counter trend. But this is just the complex pullback you learned in the boot camp, right? So, but my hedge entry was based off the break of structure to confirm the pullback even better. Then I knew this is my pullback. Yeah, again, that's the daily the daily cycle. Sorry for that again because it will cause probably more confusion. But this I know this will not gonna be broken until we break the high. That's why my entry was here. Yeah, and then we took out the high, jump out there, called the reversal, looked for re-entries, did not give me one here or here, so I entered it here with the RD setup. But yeah, that's not a setup for you, so don't get too caught into that one for now. I hope that answers the question.
One question, and Victor would like to ask you a question.
Yeah, sure. Go ahead, Victor.
In GSHEV, after you took the entry and it tapped into your IFC, the market started to build liquidity again. It started to build equal lows during Asia session. And this is something that I get when I start seeing that, it just starts to worry me because I am at that point, I get uncertain whether my entry was correct. And in your case, you obviously almost got tapped out. You got tapped out of one of the entries, and then the second one missed you
Yeah,
by like a pipette or two.
exactly.
So when you're seeing that after the trade, what is it that like what do you do?
Mm, First of all, I was not around when that happened. I think it was like yeah. So I came back like like a few candles after that. So because it's midnight for me, I was doing some other stuff, and I came back when it was around here, right? So I was looked at it and it was like almost freaking out because again, seeing this wick, and that's just the Asia madness. Because yeah, as you probably noticed and know, Asia opens the spread like crazy exactly at that time, right? I mean, the spreads will open like crazy, like 30 pip spreads and whatever. So it's always a bad idea to be in a trade in that area if you're close. But I was not close at this stage. At 11 o'clock, my time, that's where the madness happens. They open the spread like crazy and doing like wicks like this. They do it all the time. So you just need to be sure that you're a little bit far away from that madness to happen, and I thought I am. That's why I broke even. And if I would be lower than that, I would not have pulled it break even, and I would be fine on both entries. So that was my mistake to break it even while in Asia gap, right? I call that dead gap because yeah, again they throw in like mad wicks and open the spreads, and if you take a sell, yeah, they just open like 30 pip spread on you and take you out. I mean, that happened to me too. So I never like holding trades into Asia. I hope that answered the question, and I hope that was what you asked.
Okay. How
Yeah, Dennis. He's funny. My God. Yeah, Julius, there you go.
okay,
Sorry.
how do you know if it will reverse after taking equal lows and equal highs, I think, or it will continue? How do you know? That's someone's question here.
Yeah, it's always based about the liquidity traps. Like for example, if you have equal lows being taken out and it taps into an IFC, that's a very, very good indication for you that it's probably going up. Like liquidity building up, FU candle takes out the liquidity. Where does it tap into? Right into this IFC on the 1 hour. So that gives you just more confluences of events, and it's all about combination and again timing as I told you, is very important again. Took out Asia, you had the cycle completed, you took out liquidity, you tapped into the IFC, so you combining things and giving yourself the reasons for it to be invalid, and that's what it is. Because you should understand why you get stopped out, why you get a break even, why you get an entry, of course, and where your TP is. You should all know that before taking a trade.
Okay. What's your view on order flow?
Sorry, what's my what?
Views on order flow. This is a question. Someone wants to know your views on order flow.
Okay, like Chiche was a good example for order flow today. Yeah, but I mixed some things on it to get again. It's probably not a good idea to do. Why not show it? So my first entry already explained. So that's my second one, which is that's an amazing one. I let's let people guess why I based it on that, because that's a hard one, even on the 5 minute. Let's people guess why I entered it right here, why I did that, and why was my stop right here. Oh, sorry, that's not it. Oh no, it is that. Let's people guess why I entered it here, and why is my stop above something like that. Yeah, you could think that. You can think that. Who gets it? What is RD? RD is yes, a setup which I made up myself. Liquidity, banker block, liquidity zone, refined IFC, imbalance, supply, hidden base. Okay, okay. Not far from it. So good job, everyone. And the answer was just, if you look it up on the 1 minute. First of all, yeah, that's an that's an imbalance fill. So answer that one is correctly. But if you look at it on the 1 minute, it becomes even nicer and juicier. And as you learn in the boot camp, what is this thing? What is this thing called? Wally block. There you go. That's an Wally block. So if you combine an imbalance with a Wally block, it becomes even better, because you could say, yeah, I will wait for this to happen, but the chances are great that they reverse on the Wally block. That's why I took it right on the Wally block. Stop goes above that, and there we go. So it's but again, it's a combination of things. First it tapped imbalanced, then second it was a volley block, then it was a reversal trade of this valid zone, and so on. So we're combining things. We're not just guessing things, we're combining things and react to whatever happens. And which one was the third one I showed? I think it even was an RD. No, 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 it was not. It was this one. Yeah, yeah, I cannot explain that right now because that was the RD. So yeah, I took it here. Stop goes right above this wick. So yeah, sorry for that. That's the RD. But the reversal, just watch that. Just watch that. And I hope you paid attention to what I'm told you the last. So okay, you had this right here, right? And you would think like, why is it stop here? Why is it stop here? So you, if you would understand the cycles and stuff, so the day would be here over, right? So if you look to the lower time frames, whoops, where's my mouse? What happened? Whoops, there we go. So we look at the lower time frames around here. Okay, let's make it like that. So you see that it's all valid. And you can break it even more down. I think, first of all, I think everyone can agree that this is a very valid IFC, right? Again,
Yeah.
tapped liquidity, boom. So this becomes your IFC, huge imbalance. So if you break that down to the 1 minute, that becomes your refined IFC, right? So where's that thing? So if you put your entry, your pending order, just write that, and your stop should go below here just to be safe. What do you think would happen? I hope we will not get any wrong answers. No, 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 it's not hit the stop loss. No, that's a valid setup, that's for sure. No, almost, because we you have to understand, like, think about it. What we're doing on GJ the whole day. What were we doing? Just look at that. We're building up sell liquidity all day long. So this is just a picture perfect sell trend, right? So there's a lot of people already being induced short with this trend. So if we have something like that, we don't really need a high liquidity grab, but we did anyways, right? So just look at it. The liquidity trap is here. That's why I said combine things. Look at that. Isn't that a beautiful liquidity trap as it gets? How can it be more beautiful than that? So equal lows built up. Daily cycle was about to be done. Tapped right into this IFC. It's as clean as it gets, right? And yeah, the ones you should not have looked at is this one. But that's again just part of the liquidity grab and stuff. What's that? Yeah, that one you should not look at it, that's for sure. And that's just part of the advanced stuff. And I have really good reasons for not to look at this one. But just for the facts I give you right off now, just see it like that. What is that? Equal lows, false thing. And if you look at this thing, because I almost I almost fell into that because I did not pay close enough attention. If we just throw the the line here, they almost caught me on that one. They almost, but they did not at the end. So we build up liquidity. You could say that this is your right FU candle, right? So that could be valid. But if you look closely, whoops, there we are. There we are. And that's why it's important to pay attention to the details as well. And to go to the 5 minute. We did not get the imbalance fill yet. So this is not valid yet. So again, the structure was right, but it was just another trick because they did not tap the imbalance yet. So you should not enter it here in the middle of the imbalance. You should wait until they tap the imbalance right here. So we put the line from here to here and check again what happened then. Boom. So if you go to the 1 minute once again, they give you this false FU candle, tricked you. It did not tap imbalance, but this one did for sure. Stop was right below this one. Entry pending order valid on this one because, yeah, obviously there was liquidity traps building up on the lower time frames and for sure on the 1 hour. I mean, it cannot be clearer than that, can it? Same concept, different day. Just not falling into the traps. I almost did though. Almost did. But I watched again and I did not. So then you take it from here. pending goes from here. If you miss the pending, that's fine too. Just enter it with this one. I did that too. Entry goes here, or the body. In this case, the body. You can do the wig too, that's fine. Stop goes below that thing. And off we go. So you had two valid entries on that one. And again, you had this beautiful break of structure to confirm everything. So two very valid setups. One is the reaction, one is just the edge entry. Okay? So I hope that makes sense, because it should.
Okay, seems the questions have really gone down now.
Yeah, I think we do it like 5 more questions, or maybe 3.
If any, there's no, I'm just saying comments, not really questions for now.
Okay,
Yeah.
okay.
Okay, one question. Are we having daily cycle in the next call?
I'm not sure about that, because that digs into the way advanced things, and I
Okay.
don't want to be too quick on stuff,
Okay.
because I probably know that some still have a lot of questions open. And yeah, I mean, it would be crazy if you get that by one call. To be fair, I mean, it took me years, right? So it's yeah. So that should be
Okay.
clear. Yeah, but as for now, I hope everyone enjoyed the session today, and thanks for the ones who stayed up so late. And obviously, I hope you learned something new. And again, that's some very important stuff, and I hope you took notes. And yeah, we will see you tomorrow and August. People, obviously, welcome to the community, welcome to WWA. Enjoy your stay. If you have questions, everyone will help out, that's for sure. If you have any more questions about stuff, let me know in Discord, and let me know in Discord if you enjoyed it or not, or what we can do better or whatever.
Loads of thank you, thank you, thank you, thank you, thank
Yeah,
you.
and again, also thank Esther too,
Thank you.
because she even made it possible today. So that's
Thank
for
you're
sure.
welcome. It's always a pleasure.
Yeah, Esther, big shout out to you.
You're
Yeah,
welcome,
highly
guys.
appreciate that. So have a good night, everyone, and cheers. Here in the chats.